Hi, I'm Kevin Flanagan, head of fixed income strategy at Wisdom Tree.
And I'm Jeff Weniger, head of equity strategy. And this is Minds on the Markets, where we go behind the scenes and beyond the trends to explore the forces impacting our markets.
Hello, everybody. Welcome to Minds on the Markets. We're coming to you live and on studio at the Wisdom Tree YouTube channel. And don't forget as well, you can look at the written version on our website as well. So, Jeff, I wanted to talk to you. I mean, here we are. The month of August seems like it's been going on forever, right? Mm-hmm. We've had jobs reports, Jackson Hole, the yen carry trade. And yes, I did save the best for last. Wanted to talk to you and pick your brain a little bit about the yen carry trade. And is there another carry trade for us to look at? But, before we do that, real quickly, for people who are watching this, who may be reading about it or seeing it on CNBC, real quickly, what is the yen carry trade?
Mm-hmm. And it was so topical a few weeks ago, and it has fallen a little bit out of the discourse. It's really pretty simple, where you find the currency that has the lowest yield. That's the one you borrow in to turn around and buy NVIDIA or Bitcoin or whatever were the popular trades back in earlier in the summer. And then as soon as something has a comeuppance in the market, you have to reverse all of that. And that ended up causing the yen to have a flood of money coming into it. It got super strong. A lot of the popular trades of a few weeks ago had a really, really rough early August, but it's been back on with the market. So that is the yen carry trade in a nutshell. And it became the issue of this summer. I still think it will be an important issue for the rest of the year, but wild market action this year.
Yeah, it's funny. So I alluded to Jackson Hole, and obviously we just had that Chairman Powell pretty much telling us that a rate cut is coming at the September Fed meeting. But we've had some different communications coming from the Bank of Japan. Tell us a little bit about that.
Well, they were worried that the yen carry trade was going to unwind, because if you have U.S. interest rates coming down and Japanese interest rates coming up, then that would be the unwind, because it would make the yen more appealing. It would cause the yen to, in turn, strengthen. And the Bank of Japan doesn't want it to strengthen too much. They wanted it to strengthen, but just not too much. And they already got that big, bold, violent move of about 3 or 4 weeks ago. So they've walked it back a little bit. You had two BOJ officials in recent weeks basically say, stop, we were kidding, we're not going to hike. And so I think that's pretty much what we're looking for. Clear through the end of the year, probably sitting on their hands at the Bank of Japan, because they realized they overplayed their hand.
I mean, so like you said, things are fluid right now, right? We're trying to determine what kind of Fed easing or rate cut cycle this is going to be. What is the Bank of Japan's next move, or when could that occur? But should there something else be on our radar when we're looking ahead that maybe we're not thinking about right now?
Yeah, this is one of our rising hypotheses, which is that there could be a yuan carry trade out of China. If you look at the back of the envelope math on these relative bond yields, remember, Japanese stocks ran for 12 years on the yen carry trade, and the Nikkei was around 8,000 and got up to 42,000 in a dozen years. And one of the things, if you think about, well, let's go back 4 or 5 years ago, Chinese long bonds were yielding 4%. Japanese long bonds were yielding 0%. And so it's like, well, I'm not going to do a carry trade out of China. But now they're both 2%. So it's still very accommodative out of Japan. So you got the bull market thesis right there. But now can you pick the rubble out of the Chinese bond market on account of, okay, Chinese stocks are at 11.5 times forward earnings. Goldman's saying earnings growth this year will be 8%, 10% next year. So that's decent. That's more than decent out of China. And the trade-off is 2% on the long bond. So you could end up with a situation where, at least domestically, with mainland retail investors, let's say, buying Chinese stocks on a reincarnation of, you ready for it, Kevin? You thought it was gone. The TINA trade. TINA, there is no alternative. And right now, TINA, there is no alternative to buying stocks and apartments and what have you, because the bond market doesn't yield anything. TINA's alive only in China and Japan. And so a bull case for East Asian equities appears to be on.
It's good stuff, Jeff. I think we're going to end it there. Something different to think about. We're always flooded with headlines here, centric on the Fed. So this is good stuff to think about and for investors to consider. Here we are, the waning days of summer. Enjoy it, everybody out there, and we'll come back and talk to you after Labor Day.